Hello everybody, welcome to the Dove Financial channel. Here we kind of go over different microcap stocks and kind of look at current events and what's going on. And today I have a bit of an interesting discussion topic. So I read an article in the Wall Street Journal about a week ago that talked about how the median retail investor now spends approximately 6 minutes of research before they actually put their money and invest into a company. And so what I kind of went ahead and did is I spent 6 minutes 3 separate times, starting at Yahoo Finance, starting with a screener, and then starting with an ETF to try and come up with 3 investment theses and kind of walk you through why I think it's a horrible decision, and I mean terrible decision, to only spend 6 minutes of research before investing your money into a company. Now, the kicker is I'm going to go through all 3 of these investment theses, and then at the end of it, I am actually going to put my money into one of them. And that's not to say that I think it's great or anything. I just thought it would be really fun to kind of keep up with and kind of go over the problems you have and to keep this like as genuine as possible. From this moment onward, I will not spend another second of actual quality research into any of the businesses that I pick and I own, and I will simply go off of the 6 minutes I was allotted and just occasionally give updates into that position, my thought process, if earnings come out, how it's really hard to hold on to something during down days if I really don't even have an investment thesis. So without further ado, I'm going to kind of walk you through my process that got to each one, and we'll start with the one on screen, which is of course FedEx. Now for this 6-minute time challenge, what I went ahead and did was I started the timer and then I went to the front page of Yahoo Finance. And immediately I was bombarded with the NVIDIAs, AMDs, everything like that. And I tend to find myself in a bit more of a value investor. So already trying to wade through where it's just either really, really greedy or really, really terrible and the news is either like very high or very low, it can be challenging. So I kind of took the Wikipedia search game strategy of just spam clicking different articles until I kind of found something that I thought might fit more with my profile. And really, it was just a lot of stressing out. This is actually like the second iteration of me recording this, because the first time I thought it would be really fun to kind of like do this process in front of you guys. And then I just didn't say anything because I was so in my head, I'm like, oh my God, I have only 6 minutes and then I have to put my money somewhere. And it was just a lot of silence and me spamming and just progressively going and you don't have the opportunity to really get to know any of these business models. You don't get the opportunity to look through valuations or really understand anything about them. So again, with FedEx, this is something I kind of just stumbled upon. I'd say I stumbled upon FedEx with approximately 2 minutes left in my timer. Originally, I was looking at Coinbase, but that was just because it popped up as one of the first articles, and I made the terrible decision that I'd try and read the entirety of what it was saying, so that ate away like a fat portion of the clock there. And really what was going on with the Coinbase thing was I just, quite frankly, I don't know enough about it in the back of my mind already to be like, this is a solid decision and I should go for that. So FedEx, in terms of an investment thesis, I'm giving it's probably a 5. To be honest, I couldn't really walk you through my investment thesis. I could just walk you through, this is a company I stumbled upon that appeared to be kind of cheap-ish. Like the PE at 14 isn't horrible. The price to sales wasn't too bad. It pays a dividend. None of this is like quality reasons why you should invest in a company. I didn't even really have time to go over a 10K or most recent earnings report. So that's going to cap it off on the FedEx. I'll walk you through. Next, we're going to get to a company that I can't even actually really pronounce the name of. Schlumberger Limited. Now, this one is special because I started with a screener, and starting with a screener, I think this was a better approach than just kind of clicking through headlines. At least with a screener, you can kind of like take everything in the investable universe and kind of like ideally trim it down to companies that fit your criteria. So again, I talk about how I'm a little bit more of a value-minded investor personally. So I do take into account price to sales, PE, dividends even, especially if I don't think a company can deploy their own capital well. I'd much rather have that capital me personally. So this one, I think some of the filters I used was I wanted above a mid cap because I do typically really enjoy looking at smaller cap companies in addition to larger cap companies, but 6 minutes I don't have enough time to accurately depict whether or not I'm looking at something that's terrible or it could potentially carve away and steal market share from bigger companies. I just don't have that luxury with 6 minutes. So then I tried to look a little bit towards EPS growth. I did price to sales below 2. I think that was a great starting point. I did a dividend above 2%, and I think that really trimmed me down to 3 options. And it was Bank of America, which again in 6 minutes, Warren Buffett sold a ton of it. I know that's not a solid reason, and I'm not one of those people who's like a religious, you should follow everything Warren Buffett does because he's the LeBron James of investing. Like, I do think there's a lot of value there, but that I wouldn't ever base my investment thesis, and I'd gladly buy something he sold if I thought it was quality, but given how little time I had, I just had that in the back of my head, and I was like, nope, can't do that. So I moved on to, I had 2 more left, and Schlumberger Limited, or however you pronounce it, traded cheaper. So I just clicked that, and the approximately about minute and a half I had left, I sped over to the investor relations to try and get a PowerPoint so I could learn it all what they do with their business model. And I'll be completely honest, still don't really know. It said utility and gas. They do something with utility and gas, and they're cheap. Overall, probably like a 5.2. I give it a slight advantage to FedEx because I at least was able to filter by things I like, and this popped up. Yeah, I'm not going to part my money with this. If you guys don't see the one we have left, you'll see why I'm parting my money with that. I guess that ruins the surprise. But anyways, moving on to the third investment we have today as an option. We have Alphabet. Now this process I kind of took, I wanted to start with an ETF I really liked, look at their top 10 positions and see what was cheap that I could buy. And so I picked QQQ, obviously NASDAQ 100, and I want some tech exposure, obviously. I am more value oriented, but again, I completely understand technology as if you haven't owned a sizable portion of technology, you've underperformed the market basically for the past 20 years. And so with QQQ, it was pretty easily Alphabet for me, honestly, just looking at the top 10 positions. Admittedly, I was working with companies I've already kind of looked at a lot, and I think that also might play a portion into why some investors, well, not some, if the median retail investor spends approximately 6 minutes of research, that at least to me indicates that they're dealing with like only companies and business models they know, or they just get rando investment advice and only go off of that. Who really knows? I don't fall into that crowd, but I did find like I felt a lot more good like, well, looking into Alphabet as if I didn't like really need to spend as much. And I think a lot of that just kind of boils down to me being really familiar with Google. Now, obviously, I don't believe at all I could go in and out of their business model. I mean, I think you have to be a little bit delulu to think that in 6 minutes of research you can accurately give an entire investment thesis on Alphabet, starting with their search, going into their AI, going into YouTube, going into all the companies they own, going into even their recent Wiz acquisition, which I didn't even have a chance to really read over. I think if I vaguely recall on that, it looked kind of expensive. I don't really remember, didn't have time to read on it. I guess I won't now for the sake of understanding why this is a bad idea. I didn't need to teach myself this. I just thought it'd be a really funny idea, and like, if something's funny to me, I'll probably do it. At least with Alphabet, it's not like they're gonna go to zero anytime soon. I mean, watch me say this, and I didn't get the chance to miss like a probe that's gonna fucking explode their entire company. That would be wild to me. But anyways, Alphabet's a business model I'm a little bit more familiar with, at least search and YouTube ads and things of that nature. It seems relatively cheap. They do pay a dividend. It's not a ton, but at least there's some potential for compounding there. And they're a player in the AI space that isn't wildly overvalued and doesn't trade at a price to sales of 30 plus or a PE ratio close to 100, which at this point is a very, very low bar, I know. But unfortunately, that's kind of the way it is if you want to play that space at all. So hopefully this was a little bit of an education in what not to do. Don't look at this in terms of like, oh, I could come up with an better investment thesis in 6 minutes. No, I really am trying to make this be like something where you can be like, maybe I'd have similar conclusions and I'd have similar biases that swayed me, and that's why I should do my due diligence to part with my money. Because even, I forgot to rank this. I'd give this one a 5.7. Honestly, pretty much solely on the basis that I know Google, and I feel better giving that to Google, which again I think should speak volumes. The fact that I'm saying that I'm giving something a higher thing because I'm more familiar with it. I'm starting to see why people only spend approximately 6 minutes of research on something. Don't do this. Let me preface that. Do not do this. I know right now we live in a very instant gratification time, and we need the money now and all the money now. But like, make good decisions, good financial decisions. Watch this become the best position in my portfolio, and it kills the point of me trying to make this video because I picked Google and not FedEx or something. But okay, anyways, thank you for checking out today's video. This was a little bit of a unique one. I kind of wanted to make like a little bit of a challenge thing and just kind of experiment a little bit. And sorry about not being the most consistent with uploads recently. I went from exams to moving a little bit to I also have an internship now. So timeline wise, I'm gonna try and shoot for once a week. It might turn into once every 2 weeks. Definitely once I get back to school, it'll be once to twice or maybe even more a week. I really enjoy making these types of videos, but again, thank you very much for checking out today's video. I appreciate it.